So, hello, listeners. Welcome back to Money Talk with Patrick. I am your host, Patrick, trading mentor and creator of TC Trading. So, in today's episode, I will be joined once again by Vincenzo Toscano. You might already know him from my podcast episode, How to Leave Your 9 to 5. If not, be sure to check that one out. Today, we will be talking more about the so-called rat race and how you could potentially escape it. It's always great to have guests in the podcast, so please show them some love and share this episode with your friends and network. It is really appreciated. So once again, Enzo, you are here with us. It was a pleasure having you before. It's always good to have a second input, talking more about personal finances, talking more about how we can help people. So how are you today?
I'm doing great, Patrick. Thank you for the invite. So yeah, it was very nice coming back again and see how we can share knowledge for all your spectators. But it was very nice the last episode. I saw you got some great feedback. I'm looking forward to discuss new topics today and see how we can help others.
Yeah, and one of the interesting things is that, of course, because the podcast is slowly growing, the audience is bigger. Also, I changed it a little bit because at the beginning I was really focusing on trading, but now it's more like broad. It's more about personal finance. It's more about money in general. Yeah, it's also about trading, but it's also about investing. It's also about psychology. It's all about improving people's life. It's all these tricks and cheats that they can use in order to become wealthier, in order to kind of become better as a person. So I know that some of my audience will remember you from that episode that we did, which was how to leave your 9 to 5, where you explain us more about what you're doing, how you did it. But just to kind of like recap, I would like for you to introduce yourself once again. What are you doing, and also more or less what are you doing to help people?
Sure. Thank you for that. So myself, my name is Vincenzo. I'm originally from Italy. All my life living in Venezuela. In terms of what I do right now for living, so 3 years ago, I was an engineer working for Rolls-Royce, but then I decided to start my side gig, which was selling on Amazon, doing Amazon FBA specifically. And then the side of the business started to thankfully increase in sales and revenue. So thankfully, I managed to cover some of my expenses, and I took the decision to leave my engineering job. And then by the time I started doing just Amazon FBA, I also wanted to diversify my income. And that's why I also started my agency, which is e-commerce focus specifically, where we help small brands, retailers, just individuals that want to start in e-commerce. And usually what I do with my team is we provide trainings, services, and just help them to get started into this e-commerce thing that is currently booming, as you all of you can see.
Yeah. I mean, that they say that sometimes you can get lucky, but you can only get lucky when you're prepared. And fortunately, you were in that specific point that you already have the infrastructure. And then it was sad what happened with the pandemic and everything, but I mean, it is a fact that it helped certain businesses and it affected others, right? Which I think again, even I, something that I would like to do with you in the future is potentially get kind of like more of a partnership, or even I could open an online e-commerce store, because I think it's important even for the people to understand that it's not only about looking for your financial freedom, right? It's also about looking for side income to diversify so that you are not stuck with one single source of income, right? A lot of people lost their jobs with this pandemic, and a lot of people were hugely affected because they didn't have any other income.
Yes.
And in the end, what that creates is that you are relying on maybe the government or these checks that they were giving you. Maybe you're relying on something, and then the situation becomes even harder because you are not able to pay your mortgage, you're not able to pay your rent or something like that. So I want to stress out how important it is to really kind of like be diversified. That's kind of like what I try to preach, at least in the podcast. Now, the topic that I wanted to discuss with you today is more about the rat race, or the so-called rat race, right? For everyone who's listening, this is a colloquial term, but the rat race is basically an endless, self-defeating, pointless pursuit, right? The phrase
Yeah.
equates basically to humans, to rats attempting to earn a reward, such as cheese to something with no avail at all. So it may also refer kind of to a competitive struggle to get ahead financially or routinely. So basically, it's like, again, if you were a laboratory rat and you were running to get your cheese and you're doing this again and again and again and again. And in reality, there's no point in doing that. And even less if you are kind of like not sad, but you are not really being happy with what you're doing. So what do you think about this? What do you think like people kind of do, or they can do better to kind of like not fall in this trap?
Yeah, I think usually the term rat race comes from the basic definition that, well, most people when they have a hamster or these kind of animals, they have on a cage, and usually what they do is they keep spinning on the wheel and the same wheel over and over and over, and that's basically what the terms is coming from. Basically, is explaining how some people stay in the same job doing the same thing for 34 years. The only thing they do is complain that maybe their income is not enough or they're not happy, but every day they wake up and follow the same routine. They don't put any effort to change that, and at the end of the day, they're expecting a change which is not going to come if you don't change your habits, what you do, and the actions you take on a daily basis to take you out of that. But yeah, I 100% think that is a term that is being applied a lot daily, because lately, because I think a lot of people is doing a lot of jobs that they don't like because they are just following the money, or some of them are, of course, is sometimes for necessity. But I think the important thing, whenever you are on that situation, is to have an end goal. So it's not bad to have a rat race a job, kind of job, for example, working at McDonald's or some kind of job that really doesn't have a long future, as long as you have an objective, because maybe you need the money to get outside of a negative situation, or you need to establish yourself emotionally. But as long as it's just a short period of your life to get you where you want to go, that's completely fine. I think the issue becomes when you reach 20, 30 years doing the same over and over and over, while you're expecting a change that's not going to come out of it. Yeah.
I totally agree. And to be honest, I think I kind of resemble what you said, because the pandemic hit everyone, and I've been traveling around, I've been trying to find better opportunities, and it really hit hard, at least for me, right? It was very difficult. And I think what you said is key. It's all about the end goal, right? It's all about the sacrifices and the hustle you need to do, and basically all the amount of crap that you need to eat at some point in order to achieve your goals. I think that's kind of like the most important part. And it's something that, with TC trading, with Money Talk with Patrick, I've been trying to do, is to inform people about what they can do based on my experiences, based on the experiences of the people who are in my network, like you, and so on. So another topic that I discussed previously was the different types of income, right? And I might sound a little bit repetitive for the last 3 episodes, but I really want to highlight the importance of knowing the different types of income and knowing which ones you have currently. Now, we have 3 different types of income. In the past 2 podcasts that I've done, I've talked only about active and passive, but I'm also going to be talking a little bit about the portfolio income, which is pretty straightforward. So active income, we already know that it's anything that you do that has a substantial material thing. If you are working and you're spending time doing something like a 9-to-5 job, if you are required to input that amount of time, that amount of hours, and you get paid per hour, that's active income.
Yeah.
Passive income is if you create a side business, something that initially it will take a lot of time to set up, because I already discussed that there's nothing as a free lunch, right? There's nothing like you can create something without putting any effort at all. That does not exist. If you want to create your business, you have to put the work in the beginning, and then maybe sustaining it's not going to be the same as active income. So you're going to be able to earn overnight, you're going to be able to earn when you eat, you're going to be able to earn when you sleep. And finally, portfolio income, as it sounds, is All your investings is whatever you are taking out from your business, from your income, putting it separately in an account and continuously growing. I've also talked about what's the best way to grow your wealth in previous podcasts, which basically is, try to pay your debts first. Once you don't have debts, try to save a certain amount, and then the rest invest, and then compound it slowly,
Yeah.
monthly. If the prices go down, just buy a little bit more, dollar cost average, and expect in the future that everything is gonna go up. uh, so now I know that you do this very efficiently. I know that you basically have all three paths, all these things that I mentioned. So I don't know if you can give us a more kind of realistic scenario of how you've achieved to do that, and what are the advantages of each one.
Yeah, sure. Yes, 100%. It's very important to have all of them because it's really when you come full circle about a step closer to get to that point of your life where you don't need to work every single day of your life, which is when you reach the financial goal of depending on passive income and portfolio, which is the last stop basically. But usually, yeah, I started 100% on the active income, which was of course with my Amazon thing and my e-commerce agency. So the e-commerce agency is 100% active, of course, because it depends a lot of me and my team providing services to my clients. So that would be like the top entrance for the active side of things. Then if I move to the passive side of things, I have my Amazon business, which now is more passive because is currently Amazon is doing everything for me. So the only thing I need to really take care of is things such as inventory or launch a new product, but it's really something that might take you a few hours or a week, and then it moves by itself, and you just need low maintenance. And then I also have other things such as affiliates, affiliate income with other software companies in Amazon space, things like that, which also form part of the passive income. And then if we go to the portfolio side of things, yes, I also do that, which is basically I divide it in two main sections. One will be the typical stocks and funds side of things, which is investing in index fund, mutual funds, single stocks, bonds, anything that really makes part of the stock market in general. And then I have the crypto side of things. Usually, what I do every month is usually always take 15% of my top revenue, which is coming either by the combining active and passive income, and I divide that 15% mainly on stocks and everything that has to do with mutual funds, index funds, and things like that, just to make sure I'm building something for the long term, investing in compound interest. And I always make sure to invest in things that have a cumulative setting in the mutual fund or the index fund, which usually means that every dividend that I get out of those things is reinvested. And what I'm trying to do is to just play with the compound interest side of things. And then on the crypto side of things, I usually just take maximum around 5% of my revenue, and I just currently mainly invest on Bitcoin and Ethereum. That's the main things, two things I'm investing with. And the whole goal of the portfolio is keep growing it, growing it, growing, and take all that revenue coming from active and passive to a point that in the future I can just rely from my portfolio and basically not need to work
Yeah,
from
yeah.
on the other two quadrants. But that's really how I'm structuring my income venues at the moment. And eventually in the future, of course, I would like to also add an extra one, which would be things such as real estate or things like that more down the line. Yeah.
Yeah, of course. I think, I mean, you're basically killing it in that way, because I think the main point is that there's no excuse, right? You can have them all. For instance, even I'm working for a company right now. I'm also having that course, my TC trading, AV trading course, which is kind of like a small passive income. Very soon I might start monetizing the podcast as well. And what I'm trying to say is that whatever you do, even if it's small amounts of money that you're receiving, all that is going to be accumulating over time, and there's no excuse really to be like, oh, I'm just depending on my 9 to 5 and then that's it, I cannot earn more money. No, of course you can. You only have to work towards it. You have to put that extra effort. Like, for instance, even I know that when I visited you a couple years ago, you were basically working even more. It was 9 to 5 and then continue working on that side hustle. And even for me, sometimes it comes to that. It's like improving skills. I'm doing certificates or I'm doing something else, and then I'm working on TC trading. I'm working on the images, the design stuff, marketing, etc., etc. But you have to work a little bit more than the standard, right? It's just pushing a little bit more. I think the only difference kind of is, and again, this is a question of taste. And this is why I say that there's no excuse, because a lot of people say, hey, I don't know how to invest, or they're worried and so on. But you don't really need to know, for instance, how to trade, right? You can always do dollar cost average. As you said, just choose the best or the biggest kind of like assets, in your case, Bitcoin, Ethereum, or just some funds, and just doing that. In my case, I'm trying to diversify more into specific stocks. I'm trying to diversify more into trading opportunities because I like doing that, because it's something that I like, something that people can do. Again, that's why I made a course on that, so that people can understand how it works and decide if it's what you want. If you want to spend your time trying to make a little bit more money that way, it's fine, you can do it. But if you don't have the time, if you have your business, well, then there's no excuse. Just do dollar cost averaging, and then that's it.
Index fund, S&P 500 is the most basic thing you can do, and you are guaranteed to do at least 5 to 8% always. So I mean, not always guaranteed, but based on history,
on average, in the history, of course.
So it's no excuse. I mean, it's just a few buttons, you put money in, and you don't need to be a trader expert.
You just wait for it. Almost the last two topics. First of all, kind of talking about assets versus liability. And I want to kind of like summarize this very quickly, because I want to talk more about your case, which I think is going to be more interesting. But assets versus the liabilities, I already talked. Asset is whatever makes you money, is whatever you buy or you have, I don't know, if you have a business, that's an asset because it's creating money. If you buy a property to rent and it's giving you money, okay, that's going to be an asset, And I also talk about the positive cash flow. What does it mean? If you're active or if your assets are giving you more money than your liabilities, which is whatever takes money out of your pocket, then your cash flow is positive, meaning that you are earning more than you are actually spending. And it could be the other way around, that if you spend more, then you're going to have more debt and so on. You're going to have a negative net cash flow, which is very important. I think this is kind of like a topic, especially for you. It's going to be very important because, if you have a business, if you have different types of kind of like costs and so on, you also need to take into consideration, okay, where are you going to invest? Where are you going to put your money? One famous example is the house, right? Is the house an asset or a liability? Well, it could be both, right? Are you renting it? Are you getting something back from the house? Then it could be an asset. But most people think it's an investment when in reality it's a liability. Why? Because you're paying mortgage, you're paying insurance, you're paying maintenance, and it's a cost to you, right? So I don't know if you have any kind of like key insights regarding assets and liabilities, because I know that you are very well aware of the topic as well.
So in terms of that, always whenever I do an investment, I always make sure that it's gonna be a positive cash flow, at least in the near to the long term, in terms of what I'm gonna get in exchange of my money. Because I think a lot of people think that as long as it's something that is considered an asset is going to give you money. Like for the typical example is a house. A lot of people buy right now. A lot of people is buying houses because interest rates are all times low. So okay, it's very cheap to buy a house, but they are not really seeing the long term effect of that, which is considering if you really are able to afford that house in the long term, the expenses, the repair, the fees to buy the house, the fees to sell the house, the market fluctuations. So all those things a lot of people don't think. and the only thing they usually think, oh, my mortgage is $1,000 and my rent was 1,200, so I'm actually a house and I'm saving money. But sometimes renting can actually be smarter, because renting, for example, can buy you time to wait for the right property or to make you move to the right location and then buy there and have a profit, where otherwise, if you're just rushing and buy just because you think it's an asset, you end up on negative cash flow. So that's a very important thing to always consider. But I think, in summary, between assets and liability, always making sure that gives you a positive cash flow is
Cash
very
flow, yeah.
important. And the other thing is always making sure that whenever you want to buy an expense, I mean, whenever you want to buy something for you that is considered an expense, that is not going to be an asset, or let's say a toy. When I say toys, anything such as a new TV or things that are really just something that's not going to add value, always make sure you buy it from the cash flow your asset generates rather than the cash you have in hand, because that is going to allow you to never touch the principal. Your assets keep growing, and at the end of the day, you're not killing the tool which initially you should have done used to create the asset in the first
Sure.
place. So yeah.
And what you're saying is key, and that's something that I've been discussing even right now with some people close to me, is that you want to look after the cash flow. You don't want to look after your total amount of money, because if you are suddenly spending more than you are actually earning, then your positive overall
net worth,
net worth, exactly, is gonna be starting to shrink, and that's what you want to avoid at all costs. So even if you have to buy a computer, even if you have to do whatever you have to do, be aware that you need to try and still maintain that cash flow, and still maintain that positive cash flow. That's gonna, even if if you are earning, I don't know, $2,000 per month, and you want to buy something that's potentially 3,000. Maybe what you can do is, okay, maybe I'm gonna kind of like pay it in monthly, so that the cash flow stays positive. And this is kind of like what some companies do, in terms of their accounting. Of course, if they buy, I don't know, an asset, a house that they're gonna rent or whatever, they're gonna say, well, this is a 5-year investment, so they are gonna equally divide that, and then of course they're trying to get that income to arrive in and be always having this positive cash flow. I think that's the main idea. So I think we're almost done. I mean, it's been a long topic, and it's very interesting. Of course, I will have you again. So to summarize, I want to talk about your business case. If you kind of talk about the income and diversification as kind of like step by step, kind of like a guide for people who are listening, in terms of your experience, how you start your business, how do you diversify your income, in a very kind of like summarized way, for them to take away like a golden nugget.
Yeah, sure. So, I mean, specifically in my case, what I did initially is use the only tool I had under my hand, which was time. So I work long hours, 12, 15-hour days, to make sure I could basically do all the work by myself. And then what I did is, as soon as I started making some extra money, what I did that is I invested that into it's not really an asset, but it was an asset for me, because it was buying me time, which was basically hiring people to help me with. And then that allowed me to start getting more work done. And at the same time, I had extra time, and that extra time I was using it to either make other relationships or start thinking into other sources of income, such as the portfolio side of things, so start thinking about how to do more passive. So I think at the end of the day, the easiest way to diversify your income the faster is to understand that money is a tool and use that to buy you time. Then you can use that time to keep creating assets. So in general, what the summary is that basically is, you need to make sure that the steps to usually follow is use your time. The time then is going to allow you to generate a cash flow. That cash flow, you use it to generate assets, and those assets buy you time again, and you use that time to create the wheel again, and the wheel keeps spinning and spinning and spinning. And then at the end of the day, what you really want to end up as an end goal in the business side of things is to have many companies under your control, or and many projects without having to work 24 hours per day. And how you do that with the money you're using to
Yeah.
provide to build a team and so on. So yeah.
Yeah. So I mean, basically, for you listeners, is diversifying. It's not
Yeah.
sticking just to one thing, because some things will fail, some things will not, will be successful, and overall, you want to keep this diversified, so that, as you said, if you have multiple kind of companies, even if they don't have to be big companies, because when you mentioned like a company, a lot of people have this misconception that, Amazon or
Yeah.
Facebook. No,
Yeah.
there's small companies, as a small business that you
Yeah.
can own. We're talking about, I don't know, maybe you open a small restaurant, maybe
Yeah.
you have I don't know, you open a hairdressing salon,
Yeah.
and you pay people to work on it, and you charge them
Yeah,
like kind of
it's
like,
diversification.
yeah,
It's
exactly.
better to have. It's always better. I always say I'd rather have 10 business that make me 2,000 each per month. An example, than one business that make 20,000, because at the end of the day, if one goes down, it's not gonna affect me. But if I have only one business that goes down, that's
Yeah.
it. I'm done. So
Sure,
that's
sure. And once again, there's no excuse, right? I'm gonna give kind of like what I've been doing in terms of passive income. I already mentioned that I do a course, so it's in Udemy. So every month I will receive a certain percentage. And again, maybe in the future I will monetize a podcast. Maybe I will try to find other ways to make more income. I'm already trading. I'm already kind of investing and being and doing that. But the point is that there is so much that you can do that doesn't take a lot of time, and this is what people are scared of. And we talk about in the last episode that people prefer to watch Netflix than actually keep trying to do some extra work that might help them. People rather spend on things that they don't really need, just because they want to impress others, instead of being
yeah,
like, what, I'm not gonna spend nothing at all. In the past couple months, I've been like super close, because I'm like, okay, because of the effects of the pandemic with what happened, I'm like, I'm not spending anything at all. I'm gonna rebuild whatever I lost, whatever I've been trying to kind of like keep
yeah,
in that mindset, because if you don't, then you're never gonna really succeed. You're never gonna really
yeah,
increase your wealth, because you're spending it elsewhere, where you could reinvest it in yourself, where you could reinvest it in, as we said, different types of investments, or in other business that might generate something. So,
yeah,
and so once again, I'm very thankful that you're here. I think you always bring a positive mentality to the people that are listening, and please, listeners, don't take this for granted. It might be very easy to just kind of say like, oh yeah, there's people that are making money, I can't, because you can't. That's the reality. You can't do so many things, and it depends on you what you want. You don't have to create the next Amazon. You don't have to create something like that at all. You can start by having some small passive income. Now, and so before we go, please let us know where our listeners can reach you if they want to learn more about e-commerce, if they want some consultancy. What's the best way to find you?
Sure. Thank you for that, Patrick. Yeah, to reach out, feel free to go to my agency website, which is www.ecomcy.com. You can also find us on Facebook, Instagram, Ecomcy. And basically, you can reach out to us in there, and we will make sure to even schedule a first call to give you free coaching. We always do that with our clients, and see how we can provide value. And if you want also to reach out to me personally, I will be more than happy to discuss any questions you may have, either in the e-commerce side or the business side of things. Yeah.
Yeah, perfect. And so apart from that, if you are watching, for the listeners, if you are watching through YouTube, I will put, of course, your links in the description. If you are not yet following me in Telegram, I would suggest that you download Telegram. Just search for Money Talk TCE. I will be also putting your links in there, so that people, can see and so on. So once again, it's Ecomcy. Can you spell that for us, so that they really know
Yeah.
how to spell it?
Yeah, sure. It's gonna be ECOMCY. Yeah.
Okay, well, then that's gonna be everything. In any case, traders and listeners, I hope that you enjoyed this episode of Money Talk with Patrick. Escaping the rat race is something very achievable, but in order to do so, you will have to work for it. Take the advice mentioned above and start improving your own situation. If you are new to the podcast and enjoy this episode, do not forget to subscribe in order to get a notification of new episodes. Thank you very much for listening, and I will see you in the next episode. Take care.
Okay, guys.